Hello and welcome everybody to the first SoCal housing market update of 2021. Actually, I had to practice that 3 times to not say 2020. It's January 6th today, and obviously it's been kind of a bit of a crazy day. One of the things is as we start this new year, I think about what our reasons were for starting this in the first place. And we started doing these weekly market updates in the middle of the pandemic. I think April or May, we did our first one. And the point was to kind of give people some data that maybe they weren't seeing anywhere else. We don't copy our statistics from anybody. We calculate everything on our own directly from MLS data. And the idea was to kind of put maybe a different perspective and give people some information and some insights to the market that they otherwise wouldn't have, to let people know what is going on in the market. And I think, we kind of modified things and we kind of, refined them as we went along. But for the new year, I wanted to do something entirely new. So we completely revamped how we calculate our statistics. We looked back, we made some changes, changes that I think will really make the data better and give people more useful information. And a lot of it's things that we learned from comments from you, from conversations that we had with several of you to kind of maybe shed a new light on the information that people wanted and maybe the best ways to calculate it. So this week is going to be a little bit different. We don't have a lot of history on some of these new statistics. We tried to back populate a couple of weeks. So some of this week will really kind of just be explaining sort of what we're doing and why we made those decisions and some of the changes that we made. So without further ado, let's get started. I think we're poised to really see what's going to happen. And I think, the actions of today just remind us of sort of what a dynamic environment that we are in, and that the housing market is also a very dynamic environment. So let me pull up here with our new stats. So our first one is something that we're borrowing from our first-time home buyer market updates. And that is just giving an idea of total active listings, right? Just to give a reference point of, what's out there. So I think a lot of times when you're a consumer and you feel like there's nothing good for sale, you wonder, is that actually true or not? Is inventory tightening? Is it getting better? Which is something we really want to watch for this spring. And so right now this is a bar graph, but as we add weeks to this, it will turn into a line graph where you'll be able to see the lines. And again, one of the other things we did is we've really tried to make a lot of our data consistent. So we've divided as much as we possibly can into these under 1 million and 1 to 2 million categories, because these markets do move differently. And I think, somebody's giving you sort of just a whole market look in a particular area. I don't know if that's always useful. If you're in an under 1 million category, you may be working in a very different market, looking, buying, or selling in a very different market than somebody's in that 1 to 2 million. So right now, across Los Angeles and Orange counties, which we now have at the bottom of all of our graphs when that is pertinent, we're close to 5,000 actives under a million and about 2,500 or so under or in our $1 to $2 million category. So this is new for 2021. And really our idea is to kind of get an idea of, is our market loosening up, or is it starting to loosen, or is it staying very inventory constricted? I know that's something we talked about a lot in 2021, and I actually want to really be tracking that active inventory level. If we go to our next chart, this is a very similar graph to what we've been used to seeing, which is our last week's new listings, right? And except we've organized the data in a different way. So what this chart is telling us is how many listings came on the market in the past week. How many new things entered the marketplace as either actives or coming soon listings put into the MLS. And again, we have divided this into our under 1 million and our 1 to 2 million categories. And really, this is a much easier way to track this over time. So you see back here, we've got 1221. And what's interesting, you see is over the holidays, as you might expect, our under 1 million, that market really, those new listings really dropped. Now, what we're expecting to see is, are we going to see this number rebound next week? And that's really what I'm looking for, is do we have all those people who waited, who didn't want to list their home between Christmas and New Year's? Are they going to suddenly jump back into that market? And we're going to see this curve bend upwards. Interestingly enough, we have a much smaller data set, but it looks like it's a little bit more stable, which is our 1 to 2 million, even though that is still somewhat of a downward trend here. And again, as we talked about, this is sort of the supply side. If we're talking about supply and demand in our market, this represents the supply. And again, we're in LA and Orange counties. Now, if we look at our new escrows and contracts, that's another chart that we have here, right? And we can watch this dip downward for our under 1 million. And again, it dips downward for our $1 to $2 million as well. So we can take a look at that. This is entirely not unexpected, right? I mean, this is the holiday period. And frankly, this is the slowest and weirdest week in real estate. But now we are entering into January, and the question is, are we going to see these numbers sort of turn around and head the other direction in the coming weeks? And this chart will show that very easily if that's what's happening. Now we have our absorption rate, right? And I think this is really important too, because this reconciles supply and demand. And we see something very interesting, right? Whenever you see a number over 100%, even though the number of new listings and the number of new escrows was declining, what that says is it says that the number of new listings declined faster than the number of new escrows. And so this kind of gives you an idea too. One of the things you'll notice that's interesting is it appears, and we'll see if this transfers week over week, that we actually have a bit of a flatter curve here when we're talking about our under 1 million, ever so slightly flatter. So this kind of takes care of, these are very similar, but one other change I want to talk about with these graphs is we've changed the way we're calculating. So not only are they displayed differently, but they're calculated a bit differently. If you remember, in the past weeks, I've been talking about what I call the sort of caterpillar effect. That is, when you're in an inventory constrained market, 1 week gets a lot of new listings, and the next week shows a lot of new escrows, and you have this kind of like accordion-like caterpillar effect. Well, what we decided to do to sort of counteract that and maybe make our numbers a little bit more stable and tell a little bit clearer of a story is that we now run these based on a 14-day average. So it's a rolling 14-day average. So that means every time we run these figures, what you are seeing is the result of not only this past week, but the week before as well. And that really smooths those numbers out a bit and kind of eliminates or reduces that caterpillar effect that we saw in the last year. So that's one of the big improvements that we made. So if we move on here to our next chart, this is something new for 2021. And this is tracking our closed prices. And not only that, we've actually divided this into 3 categories. And those 3 categories are the median, which is also known as the 50th percentile. That is in our red chart here. We have our 25th percentile, which would be sort of more of the low end of the market, and then our 75th percentile, which is the high end of the market. So this way we get an idea to track these prices over time to see, are our high-end prices really moving differently than our median or even our entry-level prices as indicated by the blue line. This is something that I've wanted to do for a while, and I just wanted to wait until we had kind of a better time to do that. We're going to see how this graph works in terms of these ranges. Can we actually see the movements that we're talking about? One of the things that if you look at this, you notice is that our 75th percentile had a little bit of a drop at the end of the year, and it's largely remained steady. Median has been steady, and then so is our 25th percentile. And that's really not entirely unexpected. The entry level is usually pretty stable in an inventory constricted market, which is what we are in, because there are never enough houses to satisfy the demand in that price range. This is something that's new as well that I want to talk about. And this is called percentage still active after 14 days in the market. So this is what we took a look at. And I think this is going to be a really interesting statistic to track over time, because I think this is going to give us a very good idea of sort of the market heat level. How hot is the market? And what this tracks is we took a look at all the listings that were input into the MLS in the last 14 days. And then we look, as of today, how many of those are still active and available on the market. So right now you'll see for our under 1 million category, it is under 75% of those, meaning a quarter of those got taken away after less than 2 weeks. And then our 1 to 2 million, it's a little bit higher of a number. Now, again, when we look at this as a bar graph, this doesn't really tell us much. What's a good percentage? What's a low percentage? I think what's interesting to watch is to see the direction that this moves over time, because I have a feeling this will be a very fast reacting statistic. And let me go screen share for a second. What I mean by a fast reacting statistic is this is something that will be an indicator of what is happening right now. Now, if you'll remember in the past, we were using sort of our pending price data. And one of the things we found that's a problem with that statistic is that there's a lot of different pricing strategies in the market right now. So a lot of times we were seeing agents would drop prices to create bidding wars. That's a very common strategy. So it looked like prices are going down, but they really aren't because all those homes were in escrow way above their list prices. So what we're hoping is that this sort of heatometer, that this kind of watching this statistic will let you know how aggressive do you have to be in your offers, right? If very few homes are going in that first 2-week period, gosh, you don't have to be nearly as aggressive. Is a lot of those homes start, if that number starts creeping up, or rather the percentage active starts going down, that means more and more of those homes are being taken off that market in that first 14 days. Well, guess what? If you're a buyer out there, you're going to have to be more aggressive. And if you're a seller, that tells you a bit about your pricing. It means if that number gets very low and you have not seen offers in 14 days, you're overpriced. So I'm very excited about this thing that we're tracking, this statistic. I think it'll be an interesting one. I don't think anybody else is really looking at something like this. Again, this is LA and Orange counties. We have divided into our under $1 million and our $1 to $2 million categories so we can track these price ranges separately to see what's happening in them. Moving on, we have our list to close ratio. We've actually expanded this a little bit. We're now including LA and Orange counties for this statistic. We didn't really include that before, and we're also including both price ranges to see. We have something really interesting happening if you look at this. Now, it's important to remember that if these homes closed towards the end of this year, these were contracts that were negotiated about a month prior. You see it kind of cresting and then falling a little bit and falling more steeply in that 1 to 2 million category. I'm very curious to see what this statistic is going to do in the coming weeks when we have a little bit more data. Now we have our days on market for new contracts. This statistic hasn't really changed very much since the last time. It's pretty much the same thing that we've been calculating as always. Again, if we're looking at what's happening this week, we see a tightening, which means a tightening of inventory. We're actually, again, in Los Angeles and Orange County. So actually we've expanded our area for this statistic a little bit. Finally, we have our affordability index. And this is an index that we've been watching for a while. And what we did is it's our affordability index to June 2018. So relative to the summer of 2018, what is the median priced home? What does the payment look like on that? And we've expanded this again with both LA and Orange County data. So before we were just running Orange County data for this statistic. We wanted to, again, create that consistency across our statistics, because one of the things that, you find when you do these things is that there's no one statistic that tells you absolutely everything you need to know about the market. If there was, this would be a super easy job and we would all just calculate that same thing. Again, you have to kind of look at these multiple indexes, these multiple measures, and see what they're doing to try to paint a picture of what's actually happening under the hood of the market, right? So that you can make good decisions. Do you go in aggressively because you think that things are tightening up, and if there's a house you really like, go for it? Or do we look like inventory is going to be on the rise? Things might be softening a bit. Sure, go after the house you really want. But if it's just a house that sort of so-so and meets your requirements, write a fair offer, but don't necessarily go to the mat for that one. These are the kind of decisions that our clients are looking to make when we're out there in the field, and we want to have the data and the ability to give them that information. If you look at this, kind of just giving also a little bit of analysis, we've seen that that number has dropped. It's been hovering really for the last year since the pandemic started. It's almost been a year. I can't believe I'm saying that. We've really been hovering in that 90 to 95% range, which is great news if you're a buyer, because it means things are still less expensive than they were over 2 years ago. But I think it's important to track this over time, because I do think if interest rates move, you'll see that number go up, and we might cross that threshold where homes are actually more expensive. Especially expect that if there's an economic recovery, if vaccinations increase their rate. These are all things that might lead to that number changing, and we want to watch for that to kind of see what's going on in the market. Anyhow, thank you so much for watching. I know we are a day late, but I really wanted to get some of these new stats and our internal procedures underneath that we use for calculating these really sorted out. And I really wanted to make some improvements to our statistics for 2021. As always, thank you for watching. We love having you. Questions, comments, definitely send them in. We would love to work with you if you're looking to buy or sell in the Southern California market, especially Los Angeles and Orange counties. We are here for you. And once again, do not forget to subscribe, like, and hit that notification bell so you will know when we have new videos that come up. Thanks so much for watching.